Terry Smith recently bought Fortinet. That is why I did a cybersecurity sector analysis in the last video. I basically compared the biggest cybersecurity stocks, and turns out Fortinet looks really compelling and interesting. That is why I'm gonna take a deeper look at Fortinet in this video. Hello and welcome to Future Fortunes. My name is Christoph. This is not financial advice because, especially in this case, I have no idea about the cybersecurity sector. I can't evaluate the technology. I don't know which technology is better, which company has competitive advantages, how the customer satisfaction is. These are all important questions I can't answer, and I do not want to answer because this would take a lot of effort, and that is why this company is nothing for my main portfolio. But I decided to buy it in the Future Fortunes portfolio with a small position because it looks so compelling, because it's maybe a great company and I want to learn. I want to follow this company and learn, and maybe I can expand my circle of competence. To provide a full picture and analysis of Fortinet, I will go through the recently done cybersecurity sector analysis and highlight the important facts. First of all, the market share of Fortinet is around 7% and Palo Alto has about 8%. And this shows the market is quite highly fragmented. And as Fortinet says in its own presentation, it is ready for consolidation. So we might have an upside in growth due to acquisitions. For acquisition, the company makes a free cash flow of $1.7 billion US. The margins look great. They can pay the interest on the debt they have. The return on capital employed is for me a really important number, and Fortinet excels in this metric. Also important for me is the return on incremental invested capital. This is the return on investments that Fortinet made in the past. And also in this metric, 20% is a really good value. The two brothers who founded the company are holding 16% and they are not selling a lot. I always look at guru conviction. This is the amount of super investors who have invested in the company. And I only counted one super investor who has a high conviction, who has invested more than 2.5% of his or her portfolio. But in the number in the bracket show that 10 other super investors have invested less than 2.5%. The company is buying back shares on average 2.5% in the last 3 years. The whole sector experienced massive declines in their growth rates. For Fortinet, their growth rate compounded in the last 3 years was about 27%, and in the last 2 years only 11%. Now we come to 3 really interesting metrics in my view. First of all, I divided the expenses in SG&A by the total amount of revenue growth. In other words, in the past, Fortinet has spent 57 cents in expenses of SG&A for each dollar the revenue grew. This looks especially interesting if you think that this dollar might produce 33 cents in free cash flow. So this investment looks quite compelling. Zscaler did good as well, and in comparison, CrowdStrike had to spend $1.64 for each dollar the revenue grew. Next, I looked at stock-based compensation as a percentage of revenue, and turns out Fortinet's stock-based compensation makes up 5% of revenue, and this sounds like a reasonable number, right? And is in line with the other good players here. And what stands out is that Zscaler's stock-based compensation makes up 24% of their revenue. And their free cash flow margin is like 29%. So nearly all of their free cash flow goes to stock-based compensation. I really don't like that. And then I ask myself, if the management doesn't give out so much stock-based compensation, maybe they're paying huge salaries, So I looked at the expenses of SG&A and R&D and divided it by the number of employees. And here, again, Fortinet is quite killing it. With Checkpoint software, they have spent about 200,000 US dollars per employee. And yeah, CrowdStrike seems to be okay as well. And other players are doing not so great. As a fun fact, I recently looked at Airbnb and they have spent about 700,000 US dollars in SG&A and R&D per employee, what seems to be really, really high. And before we dive into a really fundamental analysis on whether the stock is over, fairly, or undervalued, I thought we first gonna go through my pros and cons and risks and my investment thesis so that I don't lose a lot of you guys over too much detail. In the fundamental analysis, I did, for example, a discounted cash flow analysis, and I'm going to talk about all my assumptions, and we'll take a look at a lot of tables and stuff. So stay tuned for that if you're interested, and if not, have fun with this content now. First of all, I think Fortinet is in a really good position to outperform the market based on the numbers I have shown. I think the margins are awesome and are developing good. I don't know whether the company has a moat or not. I guess the customer base is really, really sticky. There are high switching costs. And I think there might be network effects, right? If more clients are out there, the more they can maybe adjust in real time to threats and learn about the traffic on the internet. I guess that is how I assume things are. The insider ownership is great, and the two brothers have only sold around 1% of their stocks in the last 2 years. I think the company is fairly valued right now, and there's not much risk of losing money in the long term. The return on capital employed is skyrocketing, and the return on incremental invested capital is quite steady. So if you look at 10 years, 5 years, 3 years, 1 year, it's always like 20%. And I think this is good. The balance sheet looks okay, so they can handle the debt they have. I think here's an optionality, and Fortinet might grow faster than the organic growth through acquisitions. And for the cons, again, I have to say, this is not my circle of competence. I don't know whether the technology or the product of Fortinet is better than this of their competitors. The stock might be overvalued in the short and medium term, not in the long term. And for me, not optimal is that only one super investor has invested more than 2.5% and has a high conviction on the stock. Just a short note, please remember to like and subscribe. I'm a small channel and really could use your support. I think buying this stock is quite risky. Maybe this is why so many super investors have only invested a small amount of money, because, for example, there could be economic headwinds, of course, and cuts in spending on cybersecurity, for example. There's obviously a skill shortage, so Fortinet could struggle to recruit and retain cybersecurity talent, as they write in their presentation. And you remember CrowdStrike? Only through an update, not an external threat like a virus or stuff. Only through an update. A lot of services went offline worldwide, and I guess it's not clear until today how much compensation the company has to pay for all those damages. And this could happen to Fortinet as well. My investment thesis is that the demand for cybersecurity solutions is rising and that Fortinet is in a really good position to outperform the market and exceed 12% in revenue and free cash flow growth throughout the next years. And before we dive into the fundamental analysis with a lot of tables and stuff, here is my conclusion of all the things I said. If you take into account the pros, the cons, the risks, I have to say Fortinet is nothing for my main personal portfolio because of the things I already said, circle of competence, the amount of super investors involved, the high risk, and that there might be no mode, right? So this will not make it into my core portfolio. Nonetheless, I want to learn, I want to expand my circle of competence, and I want to keep track of this maybe awesome company, and I want to learn how my thesis will check out. So I will buy a small amount in the future portfolio. And before we dive into the discounted cash flow analysis, I like to get the facts straight, right? So I look at revenue, net income, EPS, free cash flow, and the shares outstanding. The development over the last year over year, 5 years, and 10 years. And here I wrote the last quarterly numbers year over year. So we see that revenue growth year over year has fallen in the last quarter to around 11%. Net income and EPS grew astonishing good, but free cash flow dropped 27%. So I will go forward with the free cash flow number because I think this free cash flow is a more reliable number. There are not many shenanigans you can do that are possible with net income and EPS. So, and in the discounted cash flow analysis, there's a base case, a bull, and a bear case. And in all these scenarios, you have to make assumptions with growth rates. So, here in the base case, I have to say the whole cybersecurity sector is expected to grow at 12%. So in the base case, I assume Fortinet will grow as well, 12%. And I assume the free cash flow cannot exceed the revenue growth because it's already at 33% margin. So it will not go to 50%, I guess. So here, base case, the growth of free cash flow, I expect it to be 12% and then maybe 10%. And in this case, the company is worth right now 39 billion US dollars. And it seems to be, right now it is at 57 billion US dollars. So this is an overvaluation of 30%, maybe. So if my thesis turns out and Fortinet can exceed this growth, then you might want to look at the bull case with 18 and respectively 15% in revenue in free cash flow growth. So in this case, the company might be undervalued 30%, right? And here are the estimates of analysts, and you see that they expect something here in between, right? They expect free cash flow to be at 3 billion US dollars in 2027. And I expect it in the bear case to be 2.7 billion and in the bull case more than that. But, and here's an important but, this is calculated with a discount rate of 15%. If we go to a more reasonable 10%, but then you need to add a margin of safety, usually. But you can see that the base case, the company is fairly valued. So this is exactly what the market thinks the company will achieve, right? In the base case, the company seems to be fairly valued at a discount rate of 10%. This whole analysis doesn't take into account that the company is buying back shares here, 2.7% in the last year. And this is why we take a look at another approach on valuing this company. Here I just take the revenue, and this grows here with my base case scenario from 12%, and then it falls a bit. And you could change that and make it a little bit faster, falling. So this revenue grows, and there's a free cash flow margin. Right now it's 33%. Could fall. You could play with this number to 30%, maybe because of competition, other competitors lowering prices, whatever. Talent costs more money. So free cash flow margin could be less than today and maybe 30%. I think they will buy back shares at the same amount they did right now in the next 10 years. So the shares outstanding are shrinking, and this means the stock will make a free cash flow per share of about $7.70. And now you have to multiply it with a reasonable multiple. With tech stocks, the multiple is around 20 to 30. And right now it's, I guess, 26 with Fortinet. So I think 26 might be for a good company, a reasonable multiple on the free cash flow. So this, the share price could be about $200 in 10 years. Today it's 75. And that means the compounded growth rate of the stock price could be 10%. Again, this indicates that the company is only fair or is fairly valued right now. Please note that the stock price could drop in this scenario, right? Around 20%. To wrap things up, I would say the company is on the point fairly valued, and with some luck, you could outperform the market. And if things don't go as planned, there's not much risk of losing a lot of money. So this was my analysis of Fortinet. I'm looking forward to follow this company and to see how my investment thesis will turn out. I learned a ton, and so I hope this video was some kind of useful for you. Again, please like and subscribe and follow this channel, and see you next time.